slides.
Hi there, everyone. Are you able to see the slides right now?
No.
No. Okay, well, let's go ahead and share the screen. All right, now are you able to see my slides?
Yes.
Yes.
Okay, awesome. Terrific. Well, I'm excited. We'll get rolling in a few minutes. We're going to set this up to live stream. So for anyone who has already joined us or who's watching this, what we're going to be covering tonight is how to buy a home in 2023. Our real estate market's already seen some changes, and I'm excited to have from our team, Rachel Garcia and Shalyse Kendrick. And joining us from Arbor Financial, Traci Stier. We'll do formal introductions here shortly. But we're just getting this going with the live stream so that anyone who wants to can watch us live. Are we live?
Yes, so we are live on Facebook. It looks like we can only stream on one at a time. So we are on Facebook though.
Okay, that's great. We'll do live stream on Facebook then, and we'll be sharing this later on YouTube. And for anyone who registered and wasn't able to make it, we're also going to be sending out a recording. So definitely getting a lot of questions and concerns talking to potential buyers about whether or not now is a good time to buy and what's going on with the market. Are you hearing that also, Shalyse and Traci?
Absolutely.
Yeah. I think anytime you think about buying a home, it's a huge undertaking. It's a major financial commitment. There's so many reasons that it's a scary thing to embark on. And I think one of the most important things is to have all of the information so that you can make the best decisions for you, for your family.
Right.
I think the more prepared you are, the more comfortable the process is.
Right.
Absolutely. Absolutely. So we will be covering tonight some of the high points, things that you need to consider. But I do want to point out that if you have additional questions, we're going to have time to cover that at the end. And we also invite you to reach out to us to ask any questions that you have directly, because we're definitely all happy to be a resource, whether you're sure you want to buy or not. And whether you're sure you want to buy now or not. You know, the more information you have, the better it is. So, all right, it is now 5:31. So let's get this started. So as promised, tonight we're going to be talking about how to buy a home in 2023. And joining me tonight, we have Rachel. Your picture's not up there, but we have Rachel Garcia, who is our fabulous marketing coordinator, who's making sure everything works.
Hello.
And we have not here tonight Brad Jones, my husband and business partner. He is under the weather, so that's his picture. That's as much as you're going to see of him tonight. We have Shalyse Kendrick, who is an agent on our team, and Shalyse is very experienced, super knowledgeable about the Long Beach area, like me, lives in Long Beach, and is great at really helping buyers to figure out what they want and explore areas and walk them through the process. So a buyer guide, if you will. And last but not least, we have Traci Stier, who is a mortgage broker from Arbor Financial. And I have been fortunate to work with Traci for a number of years now. And she just provides amazing guidance and advice and service to our clients, and always goes the extra mile to make sure that they not only are well cared for, but also that they understand the process. So I appreciate that. I also, Traci, secretly call you the queen of spreadsheets. So
I like it.
yeah. So if I have somebody who wants to compare different options, I love that you really are able to provide that kind of illustration. Okay. So that being said, let's jump into one of the questions that we get a lot, which is what's happening with the real estate market? Things are always changing. We are never static. And this time last spring, we were in a real estate market where home buyers were facing scarcity of homes, and multiple offers and bidding wars were the norm. Buyers were being asked to waive or shorten all of their contingencies. And a lot of buyers got very frustrated and kind of dropped by the sidelines. And then we saw interest rates rise, and that priced some home buyers out of the market. Lots of financial and economic and other changes in our country, and interest rates went up. And as a result, we've seen some significant changes in the real estate market. So where are we right now? So I'm going to focus right now on some of the most recent numbers in Long Beach, California, because that's where we are. But I think what's very important to note is that real estate markets are local. And so if you're interested in buying a home in Rancho Santa Margarita or Encino or Whittier or someplace else, it's really important to look at what the numbers look like there. And even within Long Beach, one neighborhood can have very different trends than another neighborhood. So one of the best things you can do as a home buyer is to connect with a local expert who works in the area that you're interested in, so that they can give you a good idea of what's going on hyper locally. But that being said, in Long Beach, here's what we're kind of seeing right now. First, let's start with inventory. We have seen that go up slightly as buyer demand fell. But when I say slightly, what I mean is we went from a 1 month supply of houses on the market in December 2021 to a 1.4 month supply in December 2023. So we still don't have enough inventory to meet the demand, even though the demand has gone down as interest rates rose. One of the things that we have seen is that homes are taking slightly longer to sell. But again, that's incremental. So we went from 20 days to 31 days. Most homes aren't taking months and months to sell. If a home is on the market for months and months, it usually means there's either something wrong with the home or it's overpriced. Talking about price, what we saw a year ago was that the average seller got 102.4% of what they were asking for. Fast forward to this past December, and that was 96.3%. Now, I think the perception is that, it's a fire sale, and now you can come in and offer whatever you want. We are still seeing some homes, if they're priced well and they're attractive, sell above the list price with multiple offers. So again, it's really key to have a clear idea of what the home's value is based on other activity in the neighborhood. One thing we did see, though, towards the end of the year was a decline in home prices, so actual home selling prices. And the median sales price in Long Beach fell by 7.7% year over year. That being said, we've seen so much equity growth for several years that most homeowners do still have pretty significant equity in their homes. So that's kind of an overview of the real estate market. And we are going to jump into the home buying process. So take it away, Shalyse.
Okay, so with the home buying process, the first thing you want to do in step number 1 here is have an initial consultation with a realtor that is familiar with the area you want to buy in. That'll take care of, your qualifications, and whether or not you should pursue the next steps and the reality of you finding a home that fits in your qualification. Then if that works out, you'll definitely want to chat with a great lender, and the lender will go over your loan options with you, letting you know what your out-of-pocket cost will be and also an estimate of what your monthly cost will be. And then based on that, you'll have an idea of where you should start shopping for your home and what type of homes fit within your budget and what you like in a home in the area. And then you'll make an offer and hope your offer gets accepted. The response that a seller can give to you when you make an offer is to counter your offer, accept it, and that'd be great, or to multiple counter. You'll hope for an acceptance outright. Step number 2, once you have an accepted offer, is to open escrow, and you'll receive escrow instructions. That's where you wire in your earnest money deposit and complete your due diligence, which is getting your inspection, getting your appraisal, and also finalizing the steps of the loan. Then the closing process happens. You'll do your final walkthrough about 5 days prior to the close of escrow. And that's just to make sure the home is in the same condition it was in when you made the offer, or to check for any repairs that have been negotiated. Then finally, you're getting ready to sign your loan documents. Those loan documents, you can either sign them in person in an office or have a notary come to you where you're at and sign them there. Once they've got those loan documents signed, you're ready to close escrow and collect your keys. And that's really it.
Well, obviously that's
There's more.
exactly. So that's kind of the overview of that. And one of the things that we do as a team, if you decide that you're interested in taking this a step further, is to schedule a time when you can meet with us in person or via Zoom. At that point, we'll go into depth on the process and answer any questions that you have. But let's go to the next stage, which is to talk about loans and mortgage rates. Sorry about that. And for that, let's hear from Traci, because I know a lot of people want to know, what about the interest rates?
Okay, so last year, January 2022, rates were in the 3s, and I'm talking about 30-year fixed rate loans. This year, they're in the 6s. While that might sound shocking, rates have actually been coming down since November of 2022. There are opportunities to later, if you were to purchase today, to maybe refinance in the future. And it's interesting to know that from 2010 to 2022, a 12-year span, rates were always under 5%. So that's encouraging that maybe this is kind of a blip, an anomaly in time, and it's encouraging for the future.
Okay. And we also want to have Traci share with you a few of the loan options that you might consider. Again, in the process, one of the best things to do is to connect with a lender to review for your personal situation, what are your options and what is the best fit. But Traci will give you some of the high points.
So Shannon teased that I'm known as the spreadsheet gal, and I love spreadsheets. Spreadsheets allow me to organize my thoughts, but I'm always going to work with you to figure out what you're qualified for, and then we'll evaluate which loan serves you best. So the loan types, the main types are conventional loans, also known as Fannie Mae loans. We also have government loans, which are FHA and VA. And then we've got alternative loans, maybe, for example, a self-employed person might not have the tax return strength to purchase. So alternative loan might say, let's look at your bank statements instead of your tax returns. So we've got loan programs for all different types of scenarios. As far as the interest rate options, fixed rate has been very popular for many years because rates have been low. Let's say you locked in a 4% interest rate, it never ever changes. A fixed rate with a temporary rate buy down, that's something that's more common today than it's been in decades. So if you were to lock your rate at 6% today, that would be your note rate. That would be the rate that's on your loan documents, but you're going to temporarily buy down the rate for either 1 year, 2 years, or 3 years. So if you were to do a 3-2-1 buy down, your rate would go from 6% all the way to 3% year 1. Year 2, it would be 4%. Year 3, it would be 5%. Then years 4 through 30, it would be at the note rate 6%. This allows a buyer to get in with a low payment that's gradually increasing. And of course, if the general market for interest rates comes down during that, 1, 2, or 3 years, you could always refinance into a lower interest rate. So it's very interesting, especially when you look at the numbers, and there are a lot of options for you. An adjustable rate loan is the opposite of a fixed rate loan because the rate can change. You don't have certainty of future rate or payments. And then finally, an interest-only loan is when you want to make the smallest payment possible. Maybe you're just getting started, or you're a commission paid commission only, or when you choose an interest-only loan and you make that interest-only payment and you're not paying principal, then your loan balance never changes. So if I make interest-only payments for 5 years, my loan balance is the same 5 years from now. And that's used strategically for some people. And of course, you could always pay extra, but you wouldn't have to. And that about sums up the loan options.
So, Traci, who would be some of the ideal candidates for potential buyers for like an adjustable or for a buy down mortgage?
So we're in a unique market right now where the adjustable rate loans are almost the same rate as a fixed rate loan. So it's really not on our radar today, but down the road, it might be something we'd want to discuss. As far as the temporary rate buy down, that is a great opportunity if you've got a seller that's willing to negotiate and pay the cost of the buy down. If you've got a seller that's flexible and says, if you're willing to pay full price instead of that slightly discounted price that Shannon mentioned earlier, that I think you said 96% of the purchase price. Well, maybe instead of reducing the price, the seller will say, well, I'll give you, 10 grand to use as you will. You could either use those for closing costs or possibly for a buy down. If you chose a buy down and the numbers worked and the seller agreed to pay for it, and then, a year from now, the overall interest rate market was low and you wanted to refinance, you wouldn't have lost the money spent on the buy down. Instead, it would reduce the principal balance owed. So you're never losing anything. It can be a win-win either way. We just have to look at those options on paper and understand them so that you know what you want to pursue as far as terms with the seller.
And that's where the spreadsheets come in.
That's right.
For sure. Okay, great. So one of the things that I think is really scary for buyers is thinking about, what if I buy at the wrong time? What if I buy now and prices come down? What if I buy and interest rates come down? Should I wait? And the fact is, timing the market is really tricky. The very best time to buy is in the past, but we don't have a time machine, so we can't take you there. And so what you're looking at really is, do I buy or do I continue renting? Because if you make a decision to not buy and to not even explore that, you are deciding to continue being a renter. And what we know is you're actually already paying a mortgage. It's just not your mortgage. It's your landlord's mortgage. And you're not building up any equity for you. You're building it up for your landlord. So you may or may not be able to buy. It may or may not make sense. But we can't tell you exactly what lies ahead. What we can tell you is this. One of the fears we hear from people is, oh my gosh, is the market going to crash? And economists, by and large, say that we are not expecting a housing market crash like we saw in 2008. And there's a lot of reasons why that is unlikely. And I'm not going to go into them all here, but we do have some videos if you want to check them out on YouTube about why the housing market is unlikely to crash. The other thing that we can't tell you exactly is when interest rates will come down and exactly what they'll go to. So the best thing to do is really look at what are your options now and does it make sense for you? All right. So what, if you were going to buy now, what would some of those reasons be? Here's a few. One is equity growth for you instead of for somebody else. Tax benefits. There are some great write-offs that you have as a homeowner that you don't have as a renter. Negotiating power. You've got more now than you did a year ago. Increased home options. Again, our inventory is slightly higher than it was a year ago. And the fact that as a buyer, you now can typically include regular contract contingencies, where at the peak of the housing market frenzy, that wasn't an option for many buyers. And we're seeing more buyers be able to negotiate and have the seller provide concessions than we were a while ago. So those are some great reasons to buy, along with some kind of non-tangible, financial things, control of your own destiny, the fact that you can paint the walls whatever color you want, having a space that really belongs to you. There's a lot of other reasons, and we know that studies have shown that homeowners are more likely to possess wealth than renters. So lots of reasons. So how to get started? If you want to start the process, I'm going to have Shalyse go through this, but I do want to point out at the bottom there are 2 QR codes. One is on the left. And if you want to schedule a time to chat with us about your search and ask any questions that you have, go ahead and scan that. That will take you to a calendar where you can schedule a time. The one on the right is how to get started with the loan process. And that will basically take you to a link that will walk you through what to do so that Traci can help you with the loan process. So those are the 2 QR codes at the bottom. You can also visit our website, showmehome.com. Check us out on YouTube. There's lots of great information out there. But these are your next steps. Shalyse?
So the first thing you want to do is determine your budget by chatting with a lender that's going to help you analyze your options side by side, or tell you the steps you need to take in order to put you in the strongest position to buy a property. That's your pre-approval process. And then you'll determine your home needs. How is your lifestyle? Where do you want to be? Where do you work? Figure out what it is you need in a home and in an area that fits your needs and your family's needs. And then you'll find the right realtor, preferably one that is an expert in the area that you want to be in. And then you'll consult with your realtor, tie down your search, and start shopping for homes and getting out there and putting out offers, hopefully.
And I will tell you that shopping for homes is kind of the fun part. It really is. There is a reason there's a whole channel called HGTV because people like that part. But it really helps if you can focus your search ahead of time. You can see homes online, but if you sit down with Shalyse and you say, hey, I saw this house and I liked it. I saw this neighborhood and I liked it. She'll then ask you, what was it about that you liked? And she may then be able to suggest other areas or other houses that would work for you as well or better. So that's why it's really key to have a guide in this process. So there you go. Okay, and here's some things when you do meet with an expert that they're going to review with you. The area, so again, areas, property types, property specifics, and that's just a few. We actually have put together a list of questions for home buyers, and some of them are things that you may or may not have thought to even ask yourself. But we're going to take you through a series of questions that will really help us to hone the search so that we are showing you the properties that best match your needs. Okay, so now we have come to the question stage. Do we have any questions at all, Rachel?
I don't see any questions yet. If you do have questions, you can put them in the chat. We'll give it a second for people to submit some questions.
Okay, well, I guess we did a good job of covering the information then. If
okay, so it looks like we do have one.
Oh, okay, great.
How long does the process take and when should I get started?
Oh, that's a good one. Yeah, so, how long the process takes is entirely up to you. Sometimes we have people contact us and they're like, my lease is up, I need to move. Well, then we can try and make the process go pretty quickly for you. Sometimes people are just at the beginning stage and they're like, I think I want to buy in a while, 6 months. Okay, great. Then let's talk about what are the things you'd want to do now so that when you do want to move, you're ready. When to get started? As soon as you know you'd like to buy a home. One of the things we're going to ask you in our consultation is ideally when would you want to be moving? And then we can help you to create a game plan that meets your needs and your time frame.
Right, we do have one more. Does it hurt my credit score if more than one lender runs my credit?
Oh, we do hear that a lot, that question.
No, it doesn't hurt your score. You're encouraged to be shopping around and not just taking what one lender tells you and being tied to that person. So assuming you run your credit report with a few lenders in the same time frame and nothing has changed, you don't have increased debt, a week after you run it with one person and you charge up your credit card and then the second one runs it, as long as no changes, the credit score should be the same. It's important that you get that mortgage credit score because you can't rely on consumer credit scores or the auto dealer credit scores. Mortgage credit scores are specific to home mortgages. So you need to figure out what that is early on. And no, it doesn't hurt you to run with multiple lenders.
Great. So I can't count on Credit Karma. That's what you're telling me?
Correct. You cannot. And usually
Okay.
mortgage credit scores are a little bit lower than what you see as a consumer on Credit Karma.
Okay, good to know. Good to know.
All right, we do have one more. So it's, if I need to sell a home and buy a home, what should I do first?
Oh, that's a very good question. You know, which comes first, the chicken or the egg, right? A lot of it depends on your individual situation. So if you have the down payment, the funds to purchase your next home first, and you're okay carrying the cost of both homes. So let's say you have a mortgage on your current home and you will still qualify for a mortgage on your new home, then you have the option of doing either. You could buy and then sell, or you could sell and then buy, either way. And then it's a matter of looking at how specific are your criteria, where you'll be looking, and what's the inventory there? Are there a lot of choices or are there few choices? If you don't have the funds and you're not able to buy first, then you will need to sell first. That's the case for most people. Most people actually end up selling their current home before buying their next home. And in that case, the first thing to do is actually to meet with a realtor, get a clear idea of what the value is on your current home, have them run a net sheet for you so you know what your net equity is after the cost of selling. Then talk to a lender to determine what you qualify for on your next home. Make sure that it's going to be feasible for you to find a home in your price range that meets your criteria, so you know kind of where you'll be going after you sell. And then talk with your realtor about the best way to time the process, whether that's tying the contingencies together on the two sales or potentially building a rent back. So there's a lot of moving parts if you're selling and buying, and the key is to connect with a local knowledgeable realtor who can really help you explore all the options and walk you through the process. Okay.
Let's see. Okay, there is one last one. Where can my down payment come from?
Your down payment can come from several different places. One can be old-fashioned savings. Another might be gift from, you know, family member or close friend or relative. You might call your 401k plan administrator and ask if you could either borrow against your 401k, or something that I don't recommend is you could potentially liquidate your 401k. If you're going to borrow against it, usually you're limited to 50%. So if you've got a $60,000 balance in your 401k, you might be able to borrow up to $30,000, and then you're repaying yourself. So that's really I think an opportunity that people should take a look at, especially if those interest rates on the 401ks loans are low. And then another option might be, what if you've got an extra car, or possibly like a motorcycle, or, you know, one of those things. If you've got a personal item that you can document a trail of selling, that could be, you know, a source of the down payment. And of course, any combination of all of the things I mentioned.
Great. Awesome. Well, I think we have run out of time. So thank you, Rachel and Shalyse and Traci. And thank you to everybody who joined us either on Facebook or on Zoom, and to the people who watch us in the future. Remember, those are the QR codes if you want to get started. And getting started doesn't mean you're committing to buying a home. It simply means that you are dipping your toe in the water to get the information to start the process and see if buying a home is for you. So happy house hunting, and we hope to connect with you soon.
Bye, everyone.
Bye.
Bye.
Bye.